So I'm sitting here with the famous, maybe infamous, Ben Lerer, CEO, founder of Thrillist Media Group, which has now expanded into Jack Threads, the Thrillist events.
Crosby Press is our new thing. That's it.
Massive media company. Started, when he was very young, inspiring story, but we'll get into that in a second. But then also is a managing director at Lerer Ventures, which is a VC fund or an angel. What do you consider?
I guess it depends. It's a super angel or seed fund focused on technology companies.
Right, which has over 100 investments to date, which is in a very short period of time. So I think starting there, curious about that whole project and how that started, and then also the investment strategy there. So a lot of people who invest and start institutional investment have a select group and they take a very involved role. It seems like the Lerer Ventures model is actually quite the opposite. It's saying let's invest in as many companies we believe in as possible that fit within a certain criteria, and then stay out of their way. What's exactly the strategy there?
Well, so it was sort of born out of a handful of investments with no thesis that my father and I had made together. Sort of like making a bet on a young guy or young girl who we met in the context of building our own companies, who we thought was super smart, tackling a space that we thought was interesting, and we were writing 25 or 50K checks with no rhyme or reason, just we liked the person. That was probably 3 or 4 years ago.
Was that before they built anything and they had an idea, or was that they built something and they're trying to kind of like
it
get to the next
depended
level?
on the business. So there were examples where there was a product. There were examples where it was a bet on a person through like an existing relationship. So like Business Insider, Henry was a friend of my dad's, and we had an opportunity to sort of get in. Really to like the Henry business, not necessarily Business Insider to resemble what it is today, but that was like a bet that we made a long time ago, a small bet, and basically 3 or 4 years ago my dad came to me after we had been doing this for about a year and said, hey, look at our list of companies that we had invested in, and the list was actually pretty good, and most of them had gone and raised subsequent rounds of financing at higher valuations, and we felt that we, whether through luck or through good eye or through good deal flow, whatever, had made some sort of smart investments, and ultimately decided that we wanted to make more. And I was busy building my company, and my dad was busy building his company at that point. And we realized that to have the sort of the time and the energy to go and do a bunch more deals, we needed to have some people on the team. And really, because of the need to hire, we ultimately raised a little fund so that the fees would support some help. And so we raised a small $8.5 million fund from friends and family about 3.5 years ago. And the thesis then was really New York is starting to pop. This is before, sort of everyone was in love with
the Made in New York campaign.
Right. And just before, this was really, I think, before Facebook had really popped. Like this was before tech had taken the sort of front seat that it has now, and had the mainstream interest that it has now, and but just before, and we, my dad, I think much more than me, realized that there was a moment in New York, and we wanted to be a part of that, and that we were meeting all these interesting people in the context of building our companies, and we wanted to be involved with them, and so it was really the investment strategy was more people driven than industry driven. It had to be a technology business, generally speaking, but it was finding an entrepreneur who we thought was really passionate, really smart, and tackling a problem that we thought was interesting, and that was about it. And we went and invested over the course of a year, the $8.5 million, and sort of at the end of it, or towards the end of it, again looked back at what we had invested in and realized we had made a bunch of good bets and invested in companies that were doing well. Not everyone's doing well, but we felt like we had built a sort of interesting portfolio across a bunch of different sectors, and we were starting to see some patterns, and we were starting to build a little bit of a brand for ourselves and see more and more deals. And on the back of that, decided to go and raise another fund, and we've since raised a third fund. And with each fund, they've gotten a little bit larger. Our check sizes are getting a little bit larger, but we're still focused on seed, and we've done about 150 deals over the last 3.5 years.
How involved? So once you find that investor or that business, and they come to you and you cut them a seed check early on, how involved are you and your team in actual day-to-day management? Are you taking board seats? Are you on weekly meetings?
Great question.
Monthly, quarterly?
It differs. And so, of the 150 companies, many of them, like 15 or 20 of them have exited at this point. The place where we really get involved is sort of at inflection points or like lifestyle, like life cycle moments for these companies. And
where it's like a critical decision, where are we taking the business?
It's where are we taking the business. It's we need to raise another round of financing. It's we need to make a really key hire or set of hires. It's we need to make some big product decisions. It's we're making a major announcement. It's this is really working. This really isn't working. It's like sort of some sort of a moment where we typically spend the most time. And what ends up happening is a lot of these companies raise, when they're successful, raise a subsequent round where someone puts a big check in. And what ultimately ends up happening is that investor, in some way, sort of becomes the new dad.
Yeah.
And they take on
the new adult supervision.
Yeah, a little bit. I mean, someone writes a $10 million check into a business that we have $300 grand in.
Right.
That person has a lot to lose, and presumably is a part of a big fund that has resources just like we do, and is going to be the person who's going to take this sort of day-to-day responsibility. And we're always there and available to talk. But generally speaking, we wait for our entrepreneurs to call us. We don't call them. When they call, we're available. We all want to meet. We all want to hang out. And I think
instead of trying to micromanage them and get
it's
down
not it's not possible to micromanage them.
Right.
And B, at the one thing that where I think we add a lot of value is that all the partners of Lerer Ventures, the four of us, me, my dad, Eric Hippo, and Jordan Cooper, we've all built and grown our own businesses and run our own businesses, and so we understand what it's like to be an operator, and we don't want to, we know how hard it is and how busy everybody is, and we don't want to be, we're not there to be annoying.
Right.
We're there to add value, and when someone calls, we're going to be there to help out. The thing about investing very early is that there is the potential for sort of disproportionately large outcomes based on small checks, because when you're investing at a $3 or $4 million valuation, you sell a company for $150 million, you can have really outsized returns. We want a bunch of those, and so there is a little bit of an element sometimes where you're swinging for the fences in certain deals where you're taking on more risk investing in a company that's trying to solve a bigger problem, and
right.
you mix that in with companies that you feel are safer bets.
Like a mutual fund model where you're kind of like offsetting your risky with your conservative
bets. A little bit.
Yeah.
I mean, I think you want to play it safe. There are definitely companies that we invest in at small valuations where we feel very confident that the entrepreneur will be able to build a $20 or $30 million business that'll give us a 10x or 12x or 15x return.
And you're not shooting for $300 million.
But they're not. The expectation is not that this is going to go and sort of change an industry.
Right.
And we mix that in with some bets that we think are huge, that if they work could be multi-billion-dollar companies. And it's still early. We've only been doing this for 3.5 years, so I don't even think we've seen a full cycle yet. But we're definitely figuring out more and more sort of like where we can provide value, and where we're a distraction to the entrepreneur, and where we can really be provide a service.
Yeah, I read an article where you were talking about hiring process and how early on it was very gut driven, and then it kind of evolved into being a little bit more analytical, but then you went back to the gut. So is deciding on an entrepreneur, you talked about how you get deal flow. There's hundreds probably or thousands of people coming to you for an investment. Are there certain things you're looking at? Because like a lot of these people may not have necessarily accomplished an incredible amount to that point.
It is gut driven though.
So what do you evaluate?
It is gut driven, and I think that that is the key, which is we really want this to be about the people. If someone has a really great product and a really interesting market, but you sort of sit across the table from them and you're like, this person's a little creepy though. I prefer to miss. Well, I don't want to miss anything, but I'm going to be much more likely to pass based on a person thing than I am a product thing. And I think that in the long run, and over 150 or 250 or however many companies we ultimately invest in,
right.
You're going to win more. If you're making gut-driven decisions around people, you're going to win. Just yesterday, I was on a panel at Columbia Business School talking, a VC panel talking about sort of gut-driven investing. And one thing that I thought was really interesting was in 5 to 10 minutes, he's saying, I know if I'm going to make the investment. I think the same thing. Now, you have to go do the diligence, and sometimes you fall in love with somebody in a 5-minute meeting, and then you sort of do a little bit more work, and you're like, wow, this person's just really charming and a really good seller. But
which enough people, you start to weed out the bullshit from the a
little bit.
Who's got the goods versus who's just the
You still get tricked. I mean, there are still deals where it looks awesome, and it's so easy to lean in, and it's sexy, and everyone is jockeying to get in, and it's a cool market, and the person's really smart, and we think we're for sure. We just, you love it, and then you find out 6 months later it's a little bit of bullshit.
Right.
There's fewer and fewer of those, and frankly, if you think about it as, in the course of 150 investments, there may be, you can count them on one hand.
Right.
So
and then your team starts to carry some of that weight where they're going to actually do the due diligence. Evaluate, and then you can,
but
like the guy on your team says,
you do as much due diligence as you can, but when you're doing seed stage due diligence, it's a different process. You're not going and validating a bunch of data. You're looking at a business plan that the only thing you know about it is that it's for sure not going to be the way that the business will look, and you're making a judgment call based on a person and based on your belief that they're the right person or the right team to tackle a certain problem. And
how does someone get to Lerer Ventures?
Well, so the number one thing is we've never done a deal with a cold call. You have to have, if you're not able to get a really warm introduction from somebody who we trust,
you're not savvy and connected enough to make a business.
Right. You're not going to be able to, if you can't get that warm intro to us, you're not going to get the warm intro to the 50 companies that you need to do business development.
Right, exactly.
So that's
so networking to get to you.
Networking to get to us the right way.
Right.
And then be solving a real problem. I think that's the easiest thing, which is, it doesn't need to be the most insane, innovative idea in the whole world, but you need to be solving a problem that is actually real. And
so a lot of my audience and a lot of people I talk to, we crowd tap. My job is, talking to advertisers and brands and agencies and digital agencies. So what companies in your portfolio? Obviously, Thrillist is a media powerhouse, and that everyone knows. What other companies are coming up, or anyone that brands and agencies should be aware of? Put you on the spot.
In the portfolio, there's a ton of interesting companies within the portfolio.
Yeah.
I think one company that
is this picking a favorite child? You can't.
No, not at all. I think a company that I spent time with this week is Percolate, which I think is doing really cool stuff, and is sort of enabling brands to be publishers in a more efficient, more scalable way.
So enhancing their content marketing.
Really enhancing their ability to create content and to create content at scale and to measure the success of the content that they're creating.
Interesting.
And
then track where that goes and how it drives engagement. Purchase.
Not yet.
Okay.
So there's tools that need to be built to sort of round out the suite, but they're doing an awesome job building a really elegant product, and they've broken many of the Fortune 500 brands who are using them.
Very cool.
Percolate. Other company that brands need to be aware of, I would think, a company I'm really excited about is Now This News. My dad is sort of it's called Now This News. My dad is the co-founder of it, so that's one of the reasons I'm really excited. But they're sort of taking the belief there is that content, sort of the same opportunity that the Huffington Post filled to sort of disrupt traditional newspapers. There's a similar opportunity around CNN and video news, and so they've built in the early stages, but they're building a mobile first video only news product. It's just building a better experience for consuming news as a consumer, and it has sort of a voice and a sensibility that isn't the sort of dry CNN news, but covers the same news that is as important. It basically
but it's still a key editorial team that's providing that content. Okay, got
it. Absolutely.
Pando Daily is doing that too.
Right. Well, so Pando or Business Insider, we have plenty of sort of vertically oriented publications. Refinery 29 in fashion and sort of fashion and beauty. Who, What, Where. I mean, there's a bunch of sort of vertically integrated.
And Pure Wow, I met.
Pure Wow,
CEO founder, which is interesting, which is women's, lifestyle catered to an untapped market, which is
untapped market of moms,
which actually is a good synergy
moms.
With Crowd Tap, which we're gonna.
Oh, really?
We'll talk about that.
Yeah, Ryan's my best friend.
Because it's it's an angle on a segment, which is what you go back to solving a problem. like there's an actual white space in that market where there's these women who are not being, you know, engaged in the right way, is my understanding.
Yep.
And then, you know, that's an opportunity for marketers who are looking for that
Huge.
specific audience.
Yep.
Cool.
No-brainer.
A lot of good stuff.
Cool, man.
Good stuff.
Thank you.
Good to see you.
You too.
Thanks.
Thank you.
Yes.